Well, after US CPI was higher than expected in January, February and March, are we about to see a drop in April? Hi there everyone, welcome to the Traders Circle Weekly Market Update. Today is Tuesday the 14th of May 2024, and before I get started, you do need to be aware that whatever I say is general advice only, and you have to consider whether it's appropriate for you. So the big event for this week and perhaps this month is the US CPI or inflation data. That's going to come out on Wednesday night Australian time, and I believe it's coming out just before US markets open. Now, we've seen stronger than expected inflation data in January, February and March, and the expectations are now that inflation again starts to fall in April, so in the April data which will be reported on Wednesday night. Markets have really been rallying based on a view that interest rates are going to be cut, but we did see some selling in April because the consistent strong inflation data really calls into question whether we are going to see rate cuts. And so markets have been all really hopeful at the start of the year, and then the reality of the data set in April. If this inflation is, if the CPI data doesn't show inflation continuing to fall, I imagine we're going to see a pretty big sell down for markets. It really is going to call into question whether we're going to actually have another rate rise at some point this year. If the data is lower than expected, I suspect we will see markets return to their all-time highs. For the US market, that's actually not very far away. They're within 1% of their all-time high at the moment. For our own market, though, it would trigger probably just over a 2% rise from the current market level. So this is probably the biggest event this month. This really is going to determine, I think, whether the next rate move is up or down. Markets have been very, very quick to predict rate cuts. They've been very quick to predict inflation continuing to fall. And we are going to see whether it is going to continue to fall or not on Wednesday night. And I would even suggest that this is more important than what the Federal Reserve says in their meetings between the rate rise and rate cut decisions. So we will in fact see Jerome Powell tonight, and it doesn't really matter what he says tonight. What really matters is the CPI number on Wednesday night. We've also got the Australian budget tonight. So our Treasurer Jim Chalmers is going to start speaking, I believe at 7 or maybe 7:30 Australian Eastern Standard Time, and he's going to deliver the budget. We already know pretty much the most important things of the budget, the big ticket items. We know how much in the green or the red the budget's going to be. It's going to be about $9.3 billion in the green. That, believe it or not, is deflationary. A lot of people are saying, well, the government calling this budget deflationary is smoke and mirrors, but the cold hard numbers are, when the government runs a $9.3 billion surplus, they're taking $9.3 billion out of the economy. And that, if you believe the quantity of money theory, that's deflationary. So they're taking money out of the economy. That should be, a deflationary thing. Whether it is or not, in actuality, is a little bit more complicated. But if you believe in mainstream inflation theory, you have to say this budget is deflationary. It's taking money out of the economy. There will be some things that I think could sort of muddy the waters a bit, and that is tax cuts for salary earners, a reduction in HEX debt for people who are paying HEX debt back, basically, or paying back debt on their higher education costs. And those things could sort of skew the budget towards favouring sort of more salary earners and spenders, and sort of a majority of people, and that could trigger some sort of spending, more discretionary spending. Overall, though, I don't think it's really going to be much of an event, this budget. Historically, the budget is a bullish time for markets. The markets like big ticket spending items being announced, and with the announcements, they buy up their supposed winning sectors from the budget. But I think, one, the big ticket items have already been announced. 2, the overall number is taking money out of the economy. 3, I don't really think there's too much more of shock or interest that's going to be announced in the budget. And so I don't think there's going to be much of a market reaction tomorrow. What I will say, and I think perhaps the most important thing out of this budget, is the forward budget projections, the forward estimates. The estimates are that we're actually going to return to deficit in the coming years, and that would be a little bit inflationary. That would sort of increase forward inflation forecasts. When the government runs a deficit, they're actually putting more money back into the economy. They're borrowing more money. They're creating more money, creating more quantity, and putting more money back into the economy, and that would be inflationary. What I would say, though, is usually these estimates, these forecasts, are based on pretty conservative estimates around commodities prices, pretty conservative estimates around, salary tax receipts. And so, even though they are expected to show, deficits in the years ahead, I wouldn't actually rely on those budgets being deficits at all, really. Especially if iron ore holds, around 100 to 150 US a ton. Usually these estimates factor in things like $60 a ton iron ore. So if they are showing slight deficits, I don't imagine that's actually what's going to be delivered. And then finally, we've got bank reporting. So we've seen ANZ, NAB, Westpac all report their half-year results. We've seen Macquarie report its full-year result, and we've seen CBA give its trading update. The banks are all holding near multi-year highs, really, and the reports are actually really underwhelming. Cash profits dropped anywhere from sort of 0 to 1% up to 12% across the major banks. All of them saw a drop in their net interest margins, their lending margins, and they're all pretty negative about the future. A lot of them had an increase in, bad and doubtful debt provisions and things like that. I really don't see the justification for them trading near multi-year highs. Obviously, it's a factor of markets being heavily overbought around the world, trading at high valuations, and our market relying on the banks to trade at high levels to push our own market higher. But regardless, these banks are extremely expensive. If you were considering an investment in a bank, I'd probably look elsewhere than Australia at the moment, because it's very, very hard to justify these banks that are yielding less than government debt in many cases, that are trading at very, very, very large premiums to their historical price to earnings growth ratios, I think that basically have been overinflated in value as a function of driving our XGO and our market indices higher rather than on the underlying company fundamentals. Pretty underwhelming bank reporting. I suspect we will see a bit of a trigger of a revaluation at some point this year. When our market does see serious profit taking, there will probably be a month where some of these banks drop 20% or more in the space of a few weeks. It might not come this year. It might wait until interest rate cuts come. I think at some point we will see that in the not too distant future. So let's have a quick look at the charts for this week, guys. This is the S&P 500, the US share market index, the largest that they have. And we can see that it had been on this downwards move for pretty much the month of April, and then it broke higher with the start of May. And that was basically the market thinking that rate cuts are going to be back on. They're pretty much back to their all-time high. They're within 1% of their all-time high. And like I said, if Wednesday night's CPI data comes in lower than expected, we will see fresh all-time highs on this market, or at least I believe we will. If the CPI is stronger than expected, we will probably see markets, or at least the S&P 500, go below their April low. I would not be surprised at all to see a move below 49.50. So at the moment, they've just retraced back to the all-time high. Extremely, extremely high prices, especially when you consider, the yield on government debt at the moment. We're about to see if they're going to go a little bit higher or whether we're going to see a bit of a pullback, and that'll occur, that key event, Wednesday night. I don't think, even if CPI growth is lower than expected, even if inflation is lower than expected, I don't think we're going to see a repeat of the strong bullish movement we saw at the start of this year. I think valuations are purely too expensive at the moment to really justify that. For our own market, we're still a little bit of a way off the all-time high. We reached 7,900 in early April, and we sold down to sort of just below 7,500 by the end of April. We have pushed up a little bit ourselves, but we're still sort of a bit over 2% away from that all-time high number. Again, if US CPI is lower than expected, and if they do break into fresh all-time highs, there is a chance we go, to fresh all-time highs ourselves, and I think a fairly strong chance. Overall, though, I think our market is running out of companies to buy to push our market higher. We've seen the bank reporting; they've all gone they've mostly gone ex-dividend now, and really, it's a big struggle to justify further higher prices on those banks. You could look to the mining space, but iron ore prices are lower than they were at the start of the year. So again, it's hard to justify higher prices on those miners. And then really outside of those two major sectors, it's a struggle to find large enough companies to drive sufficiently enough higher to continue pushing our own market higher. So again, I would not be surprised to see a fresh all-time high, but I don't think we're going to do too much further than that, even if we get the lower than expected CPI reading. So for our market, 7,900 is the level to watch to the upside, and to the downside, the recent lows around 7,500, 7,550. So that's it for this week, guys. What do you guys think CPI will do? Will US inflation continue or resume falling, or will it push back up from here? If you have a view, let us know in the comments. Otherwise, click like and subscribe, and we'll see you in the next one.